Hi, this is Alvin from Dr. Wealth, and today I want to share about two hot stocks that are Chinese brokerage firms that are listed in the US, and their share price has been doing very well and their results have been fantastic as well. So I want to give you a bit more information and whether they are investment opportunities for you. Usual disclaimer, pause and read it if you need to. Okay, so the first stock that I'll talk about is Futu, F-U-T-U, right? Futu Holdings. They are a Chinese stock brokerage firm that originated for first registered in Hong Kong, and they brought the global markets, especially the US markets, into the young Chinese investors and traders. Okay, and they have built up this ecosystem that is like a new generation of brokerage firm, which you don't see a lot of all these features in the older ones. Okay, so for example, they have things like the social platform. They have like media and news that are inside, okay, and all the traditional services that a brokerage firm would provide. Of course, they also would have, right, all the trading, clearing, settlement, financing, and all these things. Okay, there are a few things like, especially the social element of it has been pretty strong, as well as the announcements from the companies, from the news. Is also pretty relevant on this platform. Okay, I'll share a bit more later. All right. So the other one is TIGR Brokerage, and their listed name is UP Fintech. Okay, UP Fintech is the holding company name that is listed in the exchange, right? But most of the users or the customers will know them as TIGR Brokerage or TIGR Brokers. And similarly, they originated from China, right? They serve that market over there and trying to help them invest easier in overseas markets like the US especially. And they include other things like options, warrants, futures, right? Besides just equity. In the past, if you realize, if you want to open a futures account or is a separate one, right? Option is a separate one. The newer generation of brokerage then offer both equities and futures in one account. So you can see that even simple things like this, the new generation of brokerage actually does it differently, all right? And it makes it more easier for someone to just trade everything under one house rather than having many accounts and many passwords to remember. And they also extend it to funds. Okay, you can actually buy funds for certain markets. Okay, it's not open for all yet, right? And they have expanded overseas, not just in China. They have expanded even in Singapore, in Malaysia, in the region as well, right? So pretty exciting times for them, and they have not been around for that long. Okay, I will share with you a bit more later, right? So why does all these new brokerage has a foot in the door? How can the existing market leaders allow this to happen, right? Because when we talk about mindshare, branding, people always think that the market leader has all the advantages, and all these newer brokerage should not have an opportunity to come in and take a pie or slice of their pie from the market leader. Right, so why did this happen? Okay, and I like the explanation from Morgan Housel. He said that every generation want their own stuff. Okay, you don't want something that you want to associate with your parents' brands. Okay, it's uncool, right? And it's just old-fashioned. Okay, so in brokerage terms, that is what's happening as well. Okay, so in the 80s, 90s, Charles Schwab is the in thing for those people that were in that generation trading stocks, investing in stocks. Then now is about Robinhood, okay, for the Gen Y and the Gen Z, okay. More of the Gen Z actually, right? So they are using the newer ones and they shun the older ones because it's associated with their parents. So that means that brand image and mind share only exists most of the time to one generation. And if you want to capture a new generation, you probably need to really do a lot of rebranding and a lot of pivoting in your product features to make it more relevant for the new generation. And most brokerages refuse to do that. Not that they don't want to keep up with the new times. Not that they don't want this business. Is that they find it hard to give up the generation of clients that they already have, right? If you suddenly pivot everything to the young one, you're going to lose the old ones, okay? Because they're used to the user interface, they're used to the design, they're used to the way that how things work, okay? And they don't want change, right? So if any company that try to really want to capture a new generation of this market, they have to create a separate brand. Okay, while maintaining the current brand for the current generation, they have to create a new one for the newer generation. That is how usually it has to be done, right? You cannot just simply innovate like what people say, oh, you need to change. But there is a lot to give up, right? There is still a lot of business in the older generation. There's nothing wrong with that, okay? Just that all these newer companies, they come in and take a separate pie for the newer generation, right? And it has been a hit for the younger users. Some of the features that I think, or some of the advantages of these brokers, definitely one is low cost. Okay, younger investors or traders tend to have lower amount of capital, and if you charge a big chunk of commission off their capital they have, they are unlikely to make a worthwhile investment back out of it, right? Imagine it's 5% of their investment capital. Okay, and the commission cost. That is a significant return that has already been lost in the commission itself, right? So it becomes unattractive. And by being low cost, then it makes the smaller capital more sense for these younger investors to invest in. Okay, and they are feature rich. They have like live free prizes. A lot of traditional brokerages, they still charge for live prizes, right? Although that may change for some of them already because of this competition coming in. They have timely news, right? Somehow, because I do use a number of different kind of brokerages, and I find that their news are pretty timely, pretty fast. Okay. And then they have a very strong social media, like what I mentioned just now, and for users to really participate. The key opinion leaders will share their thoughts about this investment, share a little bit of their analysis as well, and that helps to generate a kind of communication and discussion, not just the very formal, prim and proper analysis, sell-side research. Once in a while, those kind of industry research, right? Those are a bit not timely enough. Right, usually things happen, then the report will come in a few days later. Okay, whereas the social media can be very fast, right? A few minutes, something happened, the discussion will start coming in. Okay, and it's that Reddit, Wall Street bets kind of era, and this social media will become a very key component of the investors' information diet. All right, and fast deposit and withdrawal. Okay, pretty fast, free. You put in the money within a day, they will recognize it, you can trade it. Okay, so you don't need to wait for like a few days before you can trade. So the markets can move very fast nowadays, right? And you want that fast reaction. The moment you want to invest, you deposit the money, you want to be able to trade. Likewise for the withdrawal, you don't have to wait too long for the money to be back into the bank. Okay, so I think they got some of these killer features right, and that's why it has been a hit from the younger users. Okay, let's talk about Futu's people behind the company. Okay, so Leaf Li is the founder, right? He was an ex-Tencent employee. In fact, he's the 18th employee of Tencent, so he's quite a senior batch. Okay, so he founded the company, and he still has a 37% stake, which is pretty big. Okay, and then Tencent is the backer, right, with a 22% stake. So add up together, they have more than 50% share in Futu. Okay, so I do think that the backing is pretty strong. Okay, with that experience from Leaf Li as well, right, in the tech scene. And TIGR's substantial shareholders, you have a bit more, right? You have Xiaomi with the biggest stake at 12%. And don't ask me why they are in this space, okay? Probably through some connection of their venture arm. And Vincent Tang is having an 11% stake via this TIGR holding. Okay, and interestingly, he is also that person who came out with a very popular drink in China, right? And it's called 元气森林. Okay, I've never tried it before, but apparently it's been a hit, especially among the females. Okay, so he has quite a few businesses as well as a gaming company, right? He make mobile games app as well, right? So pretty interesting. Wu Tianhua is the CEO and the director of UP Fintech. Okay, so he's the one who is running TIGR Brokers, and he has a 9.17% stake, smaller than relatively what Leaf Li has in Futu. Interactive Brokers has a stake too, via their IB Global Investments. I think this is their venture arm, which has a 7.5% stake. So add up together, you have a slightly less than 50% stake. Okay, so Tigers have a lot more shareholders from the public compared to Futu. Comparing both of them, Futu was started much earlier in 2011, and TIGR was started 3 years later in 2014. So you can see their period of existence is pretty short, right? Less than 10 years, the most 10 years for Futu. And let's look at their first quarter numbers that was just recently announced. Futu has more accounts, right? 790,000. Okay, these are accounts with money. Okay, if we don't count those with money, the numbers are even much larger. Whereas for TIGR is about half at 376,000. Clients' assets. Okay, how much money does the company hold in terms of the client's money? $60 billion, and for TIGR is $21 billion, 3 times smaller. And trading volume, how much value does the clients trade? For Futu is about 284 billion, and TIGR broker is 124 billion, so there's about half. And in terms of revenue, Futu is much bigger as well, with $283 million in the last quarter, and the revenue for TIGR's in the last quarter was just $81 million. And the revenue growth has been crazy, okay, 349% growth from a year ago in this quarter, and TIGR also has a triple digit growth, 255%. Okay, but I would think that Futu is still a much better company to invest into, because despite being a bigger company, the revenue growth is still much higher. Okay, so that means that their market leading position is going to get enhanced. Okay, and they are profitable, right? A lot of times I think that people have the impression, even including myself, that discount brokerages are very difficult to make money because they charge so low, right? But their results just throw me off that thinking and that perception. Both are profitable, right? In fact, very profitable. Okay, and net income, $149 million in the last quarter. TIGR is $21 million, reversed from a loss last year, and for Futu is a 6-fold increase in the net income, right? And in terms of the margin, it's very, very healthy, right? 53% profit margin, okay? And it's pretty fantastic. Like what the review I did for Coinbase, the profit margin for all these kind of brokerage firms are pretty much insane, okay? And growing at such a fast rate. And for TIGR, it's 26% net income margin, but I suppose that because they haven't really hit the critical mass yet, right? Once they hit this critical mass, I think their margin will just expand like what Futu has experienced currently. And I also want to compare to Robinhood, between Futu and Robinhood, right? Because basically Futu is a much more powerful stockbroker from China, the new age ones, right, compared to TIGR, right? So I think that and Futu has operations in US as well. Okay, they have a moomoo app that is based in US to serve the US investors and traders. Okay, and I just want to compare those numbers, right? But I can't find the breakdown for just moomoo app alone. Okay, so I will just use Futu's total numbers. Okay, and compared to Robinhood, which is mostly just in the US currently. In terms of their full year numbers, all right, these are 2020 numbers, not the last quarter, right? Because Robinhood is still a private company, it's very hard to dig a lot of information out from it, but I managed to gather some key ones. Okay, in terms of users, they are pretty close, right? Robinhood has a slight edge at 30 million users. Futu has about 12 million. Revenue for the whole year is 153 million for Futu, whereas Robinhood is 673 million. Okay, much higher. All right, they are selling order flow. Okay, they actually get paid by the high frequency traders for routing all these users trade information to the dark pool. Okay, so they actually sell the orders. The revenue generation is a little bit different, right? Whereas Futu is mainly from commissions, interest as well, right? Robinhood also charges interest if you take margin on your position. Okay, that is similar. Revenue growth 281% from a year ago in 2019 to 2020, and Robinhood has a 6-fold revenue growth, right? Pretty crazy. Okay, and considering that trading volume is higher for Futu than Robinhood, that tells you that the order setting the order flow and the margin accounts, maybe for Robinhood they have a lot more. Okay, it's a more lucrative business, right? Setting order flow, which I may not agree with that. Okay, I would prefer they not to sell my order flow, right? Let's go back to Futu versus TIGR. Okay, that's the crux of this presentation, right? I pull out some of their financial ratio, the price to sales, price to earnings growth, as well as the free cash flow yield. right? I can use a bit more ratios here because they are profitable and generating positive cash flow. For Futu, the price to sales is about 34 times, and Tiger is cheaper at 22 times, right? The lower the number, the cheaper it is. PE at 68, and Tiger is at 175. So in terms of PE, Futu is cheaper. Right, as we saw just now, their margins were higher. Right, I suspect it's because they have hit the critical mass, and it's a lot easier to scale for profitability from here. In terms of the PEG ratio, right, if it's traditionally if it's like less than 1, okay, it's considered that the growth is cheap. Okay, the growth is worthwhile to buy. Right, so at 0.1, it shows that actually at the growth rate that Futu is going, it's not expensive, even though the PE is at 68, okay, because they are growing like 3 times. 6 times, right, in terms of their PE, in terms of their earnings growth, right? And for Tiger is also not expensive at 0.5 because it's less than 1. Okay, in terms of free cash flow yield, the higher the better, and Tiger is cheaper in this sense, okay, because the free cash flow yield is higher. So altogether, they are not expensive, right? Because they are growing very fast and they are very profitable. So actually paying at this kind of prices are not expensive. All right, but there are risks, okay, because for their nature of their business, I'll cover the second risk first, right? They are dependent on the general interest in the trading of the markets. So last year, it was a very good year for the markets, for the brokers, because there is a lot of volatility due to COVID-19. The market crash, it draws a lot of investors and traders into it, making trades, and at the same time, people were trapped at home because of all the quarantines as well as the lockdowns. People are bored at home and the markets are still open and accessible. So a lot of people jump into the market and, to kill the bottom. Just very interesting and very volatile. It was an exceptional year, right? So we cannot assume that this general interest will continue in the next few years, right? So this is one of the key risks that I observed. And second is that depends on how fast they can grow in other markets, okay? Their growth rates may slow. But I do think that their runway is going to be very long, right? Like Tiger, they are already in the region. Futu has also joined in, right? Expanding via moomoo in Singapore, okay? So I do think that their growth rate will continue to be high for many years to come, just that may not be able to expect suddenly or not able to expect that every year they can grow like 3 times, 4 times their previous year's revenue. Okay, so I do think their growth rates may slow at some point, but we don't know when. Okay, so this is another risk that we need to take note of. Okay, and returns have been fantastic so far. Right, I plot out their chart comparing their two charts. Okay, and investors have also seen that Futu is a better business, right? A stronger business relatively. Right, their business models are similar. Okay, just that the Futu performance has been stronger, probably because they were in the game earlier than Tiger. Right, Tiger has a lot more things to catch up. So for the past about 2 years or so, almost 2 years, Futu has returned 660%. Okay, 6 times, and Tiger has returned 1 time. All right, and if you take a look, right, they were actually pretty much underwater for a long period of time. It was only last year, middle of last year, when the market started to recover, you can start to see that their returns have gone up. Okay, so the returns actually come about in the last 1 year, right? That's why I say that it was exceptional and the growth rate was very fast, and whether is it sustainable going forward in the next few years is a question mark. Okay, so if I'm more on the grounds that I think that this is the hype is still there, the expectation is still high. I do think eventually if the price come down, that would be a much better timing to buy, okay, rather than going in at this point in time, right? That's my view. I can be wrong. Okay, what is expensive can become more expensive. In fact, they are actually not expensive, right? Just that expectations are high. There are brokers for the new generation, whether is it Futu or Tiger brokers. Okay, as I mentioned, the newer generation don't want to use the same brands as their older generation, their seniors. It's not cool, right? And a lot of the features are not designed for them, right? So they are not used to that. They are digital natives, right? Mobile app is very important. All the user friendliness is very important. Okay, and both Futu and Tiger are backed by very strong partners, right? Futu is backed by Tencent, and Tiger, you have interactive brokers, you have Xiaomi, and you have some individuals like that Lee guy, right? He is having a lot of other businesses which can maybe cross-pollinate some of this Tiger app itself to other users that help with the marketing. Right, so they pretty have very strong partners, and growth has been strong for both of them, and runway is long because they can expand into many countries and not just in China, serving China. Even in China market, the market is super big, right? But I do think that the market is even bigger if they can expand to the rest of the world, which they have already been, and they've shown some success even in a tiny place like Singapore, right? So I do think that it's pretty positive on this side. Okay, people are embracing their UI and their UX in other parts of the world, even though they are pretty different from the culture in China. Okay, and they are already profitable, which makes things easier, right? And margins are good, okay, and growth rates are strong. So it is a pretty no-brainer for a lot of investors when they look at these numbers. It's a screaming buy for them, right? And share price is reasonable for its growth, okay? But I do think the expectation can be too high because we just came from a very good year last year for the brokers. And I do think that the growth rate may slow down in the near future. And then the share price usually will correct as long as together with the slowing growth rates, okay? Usually that's the case, right, for these kind of companies, okay? And then that may be a better opportunity to buy, right? But another approach is that maybe you can buy a bit first, right? If the share price come down, you can add on more. Okay, but no doubt, these two have shown that their business models are very strong, very scalable, and profitable and high growth rates. Okay, what else are you going to ask for, right? So I hope I've given you a good light on these two brokerage companies, and they are traded on the US markets. And if you are interested, take a look. Right, and if you like what I have shared, and if you want more stock analysis, you want more information about the markets, do subscribe to the channel, okay? And you will get notification whenever a new video is being posted. And I'll see you the next time. All the best.